All right, hello everyone. Welcome to today's Tokyo Open session on FX Street. And as you know now, this is a daily show where we feature real trading at the very heart of the Asian session. With me, I'm your host. I'm Giuseppe Basile, also known as the FibStalker, and in a minute we're going to start our new analysis here. Okay, just sharing and just getting my list, my chat in place here. So thanks a lot for joining in, moving things around. I have a few things here on my desktop, and welcome everyone. And I see here the Grace, Dale. Hello, Dale. If you're there, how are you? Thanks for joining in, Greg. Hola, Ralph. There is me as well there. Ray, Tosin, Label Lopez, Joe, Adinda, and Daisy, Peter, Ryan, Beadle, Roland, Rory, Fame Home. So I'm very happy to share this analysis with you today. I hope everything is good. We saw a few news coming in yesterday and today as well. Good morning, everyone. Good afternoon, good evening, wherever you are from. So what I wanted to share today is a little bit of a continuation of yesterday. Yesterday was a very good example of how we should never be swayed away from a good trade when we get news. And today we got more of it. Now there was more expectations on that BJO, the Japanese, the Bank of Japan, BOJ there, but basically it was a non-event. Basically, so welcome everyone. As you know, I'm going to read here the disclaimer just very briefly for you to keep that in mind, and you should always keep in mind that trading Forex and its derivatives like futures, options, and CFDs, as well as other instruments with retail off-exchange transaction, involves substantial risk of loss, and it's not suitable for all investors. So you might lose all or even more of your initial investment, because leverage can work for you as well as it can work against you. It magnifies gains as well as magnifies losses. Past performance is not necessarily indicative for future results. So please also check the FX Street risk disclosure on the website. The information I provide in this commentary and the trade ideas I provide are not a substitute for extensive independent research, and you should be performing that before you make any investment decision anyway. So it's only provided for educational purposes. Me, FibStalker Consulting Incorporated and FX Street will not be responsible for any losses incurred in investments you made or decision that you take based on information I share here. So this was the necessary disclaimer here. So let's dive right into the charts here. And of course, I want to keep commenting, first of all, on the euro Australian dollar. You will remember that what I mentioned yesterday I would review also other pairs. I believe Scott has mentioned yesterday the pound versus Japanese yen, and we're going to review that. Very technical market. But before we get into that, let's have a look at our swing trade of the week. I would call that this trade. I will define this trade like that. This is the euro Australian dollar short from 157.05 that we know having a target in the 52, 30, 35 area. Okay, now it has been non-difficult, not easy to look and follow this trade if you don't know what's going on, if you don't know how algos are positioned. And algos have shown here their hand very clearly on the 26th, which was Tuesday, and we started the We started the room in the evening, so we started the room around this area here that you see that I'm pointing at the moment, and I was in that trade already, and I took that trade in my trading room with my students as well. Some of them are, I think, they're around. So hello, Rory. There is Lee as well there. Thanks for joining in, Greg. And so if you don't know what's going on, it might be difficult to actually stay with these trades. And we want to stay with these trades because, if you are not using risk-free techniques here, this trade, this setup here, it's a 21 reward to risk, believe it or not. I mean, if the market gets into the target. So it was a 22 pips risk trade taken here. I use a risk-free technique. So it's very, very simple. I exit half of it as soon as I have 1 unit of gain that equals my unit of risk. So basically here in practice, if we had 22 pips of risk from the high, I would take half off when we get 22 pips of gain. Okay. Now, once that's done, I just forget about the trade. Okay, because if the trade gets to the target, I will get, instead of realizing 21 reward to risk, I realize the half of that plus 1. Sorry, it's in reality it's 21 plus 1 divided by 2. So I mentioned in the companion report that I do at the end of every room. I mentioned that that was the potential for the trade. And I mentioned 10.75 reward to risk, which I don't think it's too bad. Now, so if you know that there was this setup coming at this level, and we knew that level in advance, because I always like to show the hard right edge here. Now, when we look at the hard right edge, what we do, we keep tracing from highs to lows here. And now when the low is in, one bar, the next bar, the next bar, but the low is in already, and this level, the 157.08, it's in as well. We know it's there. What we don't know is whether that is going to hit that level or not. So I have here some question. Interesting interview, excellent. Thank you, Dale, and everybody. I think supposed that it was from the previous. That was 9 hours ago. So so sorry. I mean, I think I should go a little bit lower here. So that's okay. So if you have any questions, just write them down. As you know, I never shy from questions. Actually, I like to be challenged and get questions as well. And if I will have the answer, I'll be very honest, I'll give you the answer. When I don't have the answer, I will not be able to give you the answer, but hopefully, I'll try to give you anyway an interpretation of what I see. So if you see here, this is a 240 minutes chart here. Can you see the chart? Give me a yes if you can see the chart here and everything is good. And if you have any questions, please write them down. So we had that level in play, and then at some point in the arc of 4 hours, much less, that level was tested. See how as soon as that level is tested, which kind of participation we got on the downside. And when we see this, we should be content, and we should actually be we should be in a situation where we actually understand what's going on. At least we have an interpretation of what's going on. Okay, and when that level is traded, it also gave us a target, and the target is below here. Let me see if I sorry, let me reopen this. Let me see if I can show this to you. So the target here is below, and the target is 150-164. But if the market gets to 152.30 around this area, I will remove the trade. So Todd is asking long or short US dollar Japanese yen ahead of BOJ. Well, we don't know what's going to happen, right? So sorry, let me just check here. So let me just check the time. I'm not sure if you can see this. So let me Give me just 1 minute here. I want to switch on the Excel. I have an Excel which I work on which I work every Sunday. And what I do, I collect basically the news. Okay. And as you can see, every day I have in this chart, I have I cover one day here. So this is for the week, the 4th week of the year, starting January Sunday, the 24th. That was last Sunday. And for each day here, I basically copy and paste the news and the time when that happens, because I want to know when things happen actually. And then I exclude in red here, I write down all the pairs that I should not be trading at that time. Okay. Now what happens is that, let's say that I have a blank in the European session, so it means that I could trade everything. And then I trade a pair that actually shows up having some news around the 8:30 a.m. or around the American session. Depending on how well that trade is doing, I might decide to keep it or not. Okay, so the whether I keep it or not depends on you know, how away moves from the target and whether I have a freeze trade or not. So as I mentioned before, the concept of freeze trade is very, very important. So today was Thursday. We had a monetary policy statement that was supposed to come the whole day here. Let's go and let me just very quickly see here. Just very quickly verify the times here, because I just want to make sure that yeah, it was 6:30. It was 6:30 p.m. today, and it was so 6:30 p.m. today we had the start in reality. Okay, so the monetary policy statement has not come out yet. That's what I see here. Now, I'm not going to look at the. I mean, I'm not interested at the moment at the JPY for my trading, but we are going to review this and see how the algorithms are placed before the event, and that should give us a hint of where we could actually go. So I hear here Australian dollar, Japanese yen short ahead of BOJ, and similar any impact on euro dollar for the BOJ report. So let's answer the first one first. Okay, so let me see. So just let me see if I'm reading the right ones here. I think there was, yeah, longer short USD Japanese yen ahead of BOJ. So let's see. See, I don't know what's going to be the future. I don't know what's going to bring, the news what's going to bring, whether the Bank of Japan has actually decided already, because that decision is already for sure being taken to actually continue easing or not. Okay, so to be very, very clear here, you know, that's something that we don't know. Now, what we can see though is how the algorithms have placed themselves in preparation to that event. Okay, and I'm going to show you here that algorithms at this stage are still trading long. All right. Now, does it mean that the market will continue higher? Not necessarily. And market continuing higher would mean a continuation of the easing, right? Because if Bank of Japan comes in and ease, what happens is that the Japanese yen is going to lose versus the US dollar. The US dollar is going to appreciate versus the Japanese yen. We're going to see this pair moving higher. Okay, so that's the logic of it. Now let's go back to the chart and let's start it. And if you have any questions, as I mentioned, write them down and I'll address that. So first of all, US dollar Japanese yen, which is the chart that you see here. This is the 4-hour chart. Okay. Now this market has been moving lower, and before we get there, let's make a little bit of long-term analysis. It's always very important. This is gold, by the way, that keeps moving higher, which is might be an indication that maybe the stock cycle has been completed. Now this is the weekly. Sorry, this is the daily. Let me go to the weekly, and I'm going to show you where we are in the weekly. To me, there is no point in doing the analysis of a pair without starting from the weekly time frame, because all the time frames influence one another, and we need to know whether the larger time is pushing up or down, and so on. So it's very, very important that whenever you look at a trade, you always should start from a very, very large time frame. And the larger I like to use is the weekly. Okay. Now, when we look at the weekly, this is a market that has been extremely technical. I love this market. Very, very high volume. Algorithms basically, dive into the volume of this market, and they really enjoy it. So I'm just gonna show you here that there was an extension here. I broke price into the second target, and then there is another extension. I want to do all the analysis here. There was another extension. This is the weekly extension that is not into play yet. But what this chart is suggesting is that maybe once this rally has completed, this market is gonna move lower. So if this market has to move lower on the larger time frame, it means that US dollar has to depreciate against the Japanese yen, which would suggest to me at this stage, and also considering how the SP 500 is moving, so risk off, that this market eventually, once this has completed this rally, and I'm going to show you some of the levels that you might want to watch in order to decree when this rally is completed. This chart here on the very, very large time frame. So on the very large time frame, the US dollar Japanese yen is suggesting that we might move lower. Okay, why we might move lower? Because the 114.80 level has not been tested already. Did not come into play. Now, we may say, how do you know that it's going to come into play? In fact, I don't know it's going to come into play. However, what I know is that if it comes into play, there might be some participation there. Now, I also know that this market is very, very technical, so it tends to trade these levels. Now, whether it's going to go to 114.80 and whether it's going to react at that level, we don't know. But I believe firmly, also because if I show you the sequence of measure move on the daily that has failed already, I believe that this market is moving into 114.80. If that's the case, my anticipation based on how the algorithms are placed in this market would be to see no easing coming in tomorrow. Okay, and again, this is just an evaluation. I don't know what really is going to happen tomorrow. This is just an evaluation based off how I believe that the algorithms are actually positioned in this market. Okay, so large time frame here is saying that this market might continue lower. Okay, now how do we use that information? Because as Todd has asked, okay, long or short. But Todd, my question to you would be, which time frame are you looking at? Okay, because this is very important. I mean, I personally like to take swing trades on the 4 hour and then trade and then time on the 1 minute and 15 minutes. So what are you looking for? That's my question for you. And can you write it down? I would really appreciate if you would write down a little bit what you're thinking about and what you want to do with this market, and what are the timeframes you're looking for. Okay. Now, if the weekly has a potential short bias here, So you're saying 1 minute and 15 minute charts. Okay, that's very, very aggressive. But as I just mentioned to you, it is good, of course, to look at the 15-minute charts for the setup, but you have to keep a look on you have to keep a look on the chart, also on the larger time frames, to see what's going on before you dive into the 15 minutes. So it's perfectly fine to trade the 15 minutes. I find it's aggressive, but if you're looking for 10 pips, 20 pips, that's a good that's a good that's a good time frame to look at. If you want bigger moves, I like to get bigger moves, and in the meantime, I just want to check the euro Australian dollar here, what it is doing. Actually, it's correcting, of course. It's going back to lows. This market has been printing lower highs and lower lows, so it's very natural for this market to continue lower. Okay. And that's what's happening here while we were talking. So you're saying, okay, so I want to trade 15 minutes, and let's go back to the US dollar Japanese yen here. Before we get into the 15 minutes, I'm not allowed to go into the 15 minutes. Why? Because I just did the analysis on the weekly, so I need to move lower. In these time frames, let's try to understand also what's going on in the other time frames. The weekly is telling me that there is a potential for a move lower, and this move lower cannot start until the algorithms on the daily say, all right, we can start moving lower. And you have to be very, very careful, because in these markets, like in any other markets, there are corrective moves. And corrective moves usually bring price into the next measure move. Okay. Now, I will not do all the analysis for this market, but this market has been responding to longs here, 117.67, which has a target which has not been reached yet, at 119.44. Okay, so there are a number of levels in play here, potentially also level in play in the shorter time, in play short here, but that are corrective moves that could actually bring this price into the next move higher. Okay, now on the daily we don't see a lot of structure. We need price structure to trace levels that are relevant. So what the daily is suggesting is that there might be potential support at 117.67 pushing this price higher. Okay, so can you see now that, can you start seeing the big picture here? We have the weekly that is saying a potential retest of 114.80. We have the daily that has a participation long. So in a way, the daily would be a counter trend move into a level short. So what is this level short? We don't know the exact level that we trade, that this market will stop to. The market could reverse here. Although I hope not, and I don't think so, because there is a cycle that has been that probably is going to be completed here. Excuse me. But these two levels, 120.90 and 119.80, are two potential level shorts that I'm looking at. Okay, so to recap, then we have weekly down, daily potential up, and we go down in the time frames and we try to understand what's going on in the other time frames as well. Okay, so as you can see, these waves and these participation of algorithms are in all time frames. Okay, and here we could make again the case of this level, which was the daily level, which is pushing price higher. And now within this move, there are other levels that we have to consider. For example, from this level to highs, and as you can see, there was participation here. And this participation brought price into the first target here, which is this level at previous highs. So can you see here, can you start seeing things a little bit differently here? And I'm not representing that this is the only way to look at the market. There are as many ways to look and trade successfully the market as many people indeed. But a lot of people would invoke here previous highs. I'm not invoking previous highs. I'm saying this is the first target of an inner sequence, whereas there were some bunch of algorithms here who actually pushed this price higher into the first target. And now this market is retracing the next setup. And that setup has been broken there, okay? Has been broken first and then has been respected. So has it been respected a number of times? So we now have to anticipate that this level might be respected again. Do we know for sure? No. However, when we start looking at the picture on the smaller time frame, we have weekly down, daily, and 4-hour up. And if this level holds, actually, we could have a continuation higher. A continuation higher in the short term. See, on the smaller time frame, a direction is not very relevant and cannot be related to the decision of the Bank of Japan. While we can do consideration on the weekly time frame, this is a very important concept. Let me stress it. First of all, as you can see, I did no consideration about fundamental analysis, and I do every now and then some reports related to the fundamental analysis and view of a pair, and actually I did one for this pair, US dollar Japanese yen, back in August 2014. You want to go back on FS Street and look for that, and I showed how the fundamental take actually confirmed the technical take, the technical analysis. Okay, so I will stick with the technical analysis. The point is, I cannot use the smaller time frames to, like daily and 4-hour, to establish or to make considerations of what could be the Bank of Japan decision. I can use the weekly time frame to do that, because the Bank of Japan today, if it's an important decision, it's going to affect price in the medium long term. It's going to affect price on the weekly time frame, not on the daily and 4-hour. Okay, so if I have to interpret and I have to finally answer the questions, it was a long, it was a long discussion here. That I did to answer Todd's question here. But the point is, we cannot use the smaller time frame in order to decide whether this market is going to how the BOJ decision is going to affect this market. So my take here, and it's totally based on charts, is that in the medium term, this market will go down, which means that JPY, the Japanese yen, is going to appreciate against US dollar, which means that the decision tomorrow might go in the direction of tightening or just leaving things as they are, rather than increasing or renovating the quantitative easing. Now, that said, I simply don't know what is going to happen. The weekly suggested me a continuation lower, the weekly, but the daily and 4 hours are suggesting a continuation higher until we get into the next level short. Okay. Now, when we get into the smaller time frame, Todd, we can actually. I'm just keeping a look on this Euro Australian dollar here. So. And the news actually tomorrow might actually cause this market to spike one direction or the other, of course. And obviously, depending on how the news will be received by the markets, this could be, a brisk move lower or higher, or just a mild move, right? We saw the FOMC here. We had 1 hour and a half of panic here, very, very high volume, but then the market came back into that measured move under the control of algorithms and was pushed lower. So we don't know which kind of short-term reaction we're going to get tomorrow. My only hope would be that correction comes on the downside for this market. Now, let's go back to the US dollar Japanese yen here, and let's look at a smaller time frame. Okay, so what's going on in this market? We say that this market has support below price, and the trace was not this one. The trace was the next measured move here, from lows to highs. Okay, And as you can see here, this level has not been respected at the beginning, and then it has been respected. This line here makes has no significance here, and so this level has been respected. Now, my suggestion for Todd for a trade here, and would be actually, if you're in a short on the 15 minutes, you should remove your short at that 118.55, because that level, participation at the level that basically has been around now for one time, second time, third time, the fourth time we could still have participation at that level. Okay, especially if tomorrow BOJ does not tighten. Okay, so if you are trading in a very, very small time frame here, first of all, anything can happen. But my suggestion would be that, you know, I don't trade news, so my suggestion is always not to trade during news. But if this market comes back to this area here, I would remove the trade. Okay, and see, there is no short in this market on this time frame. There are longs. There are levels that support price. There are no level that push price lower, unless I have not seen that level. Okay, so this correction that you're seeing here is just because this market is moving laterally on top of support. And that support is 118.55. Todd does this long discussion here coming from the weekly time frame down to the 15 minutes answers your question. Any other specific questions here? I'll have a quick look at the SP500 here, how it's behaving. It has retested on Monday the level 18.57. You know that I mentioned the fact that if we break below 17.97, I also wrote that yesterday in the report, 2 days ago, sorry, we actually can probably kiss goodbye this whole cycle higher here, which is scary if you think about it, right? Because when we zoom out, that's what we have here. Very welcome, Todd. So that's very scary. And compare this to the rallies that we had in the past. And now, I also want to touch on a concept here. In September, I was invited for a speech at the Canadian chapter of the International Federation of Technical Analysis, the Canadian Society of Technical Analysis, CSTA, and I was pleased. I mean, there were students of the market with decades of experience, and there was also Martin Pring connected from the United States, which was quite interesting. And there was a gentleman named Ron Maisels, and he's a long-term student of the market. He specializes in cycles. And there is one thing that I knew, not though in the way Ron has put it. And Ron has clearly mentioned the fact that the market tends to move in cycles of 40 years. Now, these 40 years are not precise, and they don't come like I don't have more than this data for this, but I can move to or the index here, and I can get a little bit more data here. Now, what he said is that basically, when we see here this double top here and then a move higher, and mind, this is a almost 80 years old gentleman, highly respected in Canada, and he actually has a lot of clients. He has been very successful managing money for decades. Okay, so we're not talking about someone who actually is in the market for 15 years like myself. I mean, we're talking about someone who has seen way more, okay, and study much more as well. So he said that this pattern that you see here, double top and then the final top higher, it's the typical pattern of 40 years, a 40 years cycle. And I was amazed when he showed charts of previous period of 40 years, going back to 1735 to the European markets as well. Okay, so this was astonishing. And what he said, unfortunately, what he said is that we could be in the last phase of this 40-year cycle here, and and the cycle has started in the 1988, by the way, after the 87 crash and the Black Monday as well. And so we could be in not for 2 years like normally happens, 2-3 years here from 2000 to 2003, or even less than 2 years, 2007 to 2009, but we could be in for a longer period of price generally moving lower. And unfortunately, you may mention a dire price, a dire level there, a dire percentage. He says that when these moves happen, actually, the market might lose 70% of the value. And and we're talking about the SP 500, not talking about a specialized market like the I don't know, the Nasdaq, for example, which actually shed during this period here, 2000 2002, lost more than 80%. If we look at the chart. So I have a question here. So hi, it is long or short? So at the moment, it is still long. If we are talking, of course, about SP 500, and I gave very, very precise level, and also I gave a scenario yesterday. What I said is that if the SP 500 E-mini breaks 1799, and I always put my reputation on everything I say. Of course, I'm not sure what's going to happen, and obviously I'm not right all the times. Someone says that. Run away. So I won't say that, so you stay. And if the market breaks this level, and as you can see, this level has been consistently tested now, one time, second time, third time, and if 90, and so there is a meaning, there is a reason why the market is bouncing there. The reason is there are algorithms and smart money that are actually holding up this market at the stage. Would they be successful and push this price higher? Everything is possible here. This area has not failed yet. Okay. So, but if it fails, what I anticipate, and I cannot expect anything from the market, but I anticipate a move lower and then the last rally in this market, and that should be the place where if you have capacity, you should go short this market. Okay, so that's my strategy as well. Of course, I never blindly buy or sell these levels. I have a technique which is called the FibStalker timing, whereas I study the sequence of measure move on the smaller time frame. When the participation on the larger time frame comes into the market and breaks the sequence on the shorts, then that's the time when I get involved. And I want to say here that if you go to fstreet.com and search for the material I have there, let me share this. Let me share this view here if I can. If you go on FStreet, there are a lot of resources in the webinar that you might want to look at, and particularly I want to share some of the let me see, I don't see the, give me 1 second here. I don't see the FStreet page here. Okay, right, so here we go. So now that you see the page here, this is the main page of FStreet. If you go and search for my name here, you will find my page, and there you can actually look at the material. I've actually provided 2 groups of webinars. One is on the continuation style, which is one of the methods that we're going to use in the room. When you get into the page here, there are a lot of webinars here, and there will be also commentary and articles every day after the Forex Tokyo Open Live room here. If you go down to 2015, at the end of 2015, I covered, and I'm covering still, the continuation style for Forex and stocks. Okay, you can use this with both of them. And this is in 6 parts. I'm gonna complete it on February the 3rd, the 7th part. And my apologies for anyone who actually joined in today. There was some technical issues and power issues, and we couldn't actually start in time. So my apologies for that. But we're going to do this on February the 4th. So this series here, if you want to understand how to apply the continuation trading system, and by the way, if you subscribe to my newsletter, you will get the actual specification of the full trading system, the continuation trading system for Forex and stocks. I'm going to send it to you by email. So if you want to subscribe the newsletter, you can go on FibStalker.com on the left side. You can subscribe there. But there's a lot of there are premium as well free webinars also on the traditional and new uses of Fibonacci in modern markets. That explains a little bit how I trace and use the Fibonacci studies to capture what algorithms are doing. Okay, so I wanted to share this because if you are interested in these methods, and I heartily suggest you review them, because there is a lot of information that it's typically overseen. So and there can be concepts that you might decide to integrate in your trading. Well, just review them and let me know what you think about it. Okay. Now, very quickly, I want to go and if you don't have other questions on this, I want to review the pound versus Japanese yen, and that I believe is also important. We review it, and euro should end up beautifully, dipping in here and coming back into the old wealth. We're back 153.98. If that breaks, guys, tomorrow is the day we get the profits here. And even if I have to wait on Sunday, I'll be okay. And we will see how the news tomorrow will move this market. If the news moves the market in the direction of the trade, it's a sure hit here. If the market moves if the news move the market again, away from the target, you're going to see more of this behavior, and then the price backing up without a setup. This is very important. There has to be a setup for the market to consistently continue higher. Okay, this is a very simple concept, but if you get this, see, there has to be a long level for this market to be pushed higher. Okay, can you see it here? The level that I'm looking at here, there is a long, only a 52.30, exactly, near the point when I want to get my targets and my profits, and I want to get my profits above that level. Okay, and this again would be 10.75 reward to risk trade if you use risk-free, which I deeply recommend you do, and it's a 21 reward to risk if you don't use risk-free, and I don't recommend that at all. Okay, now I wanted to, yesterday I promised I would review pound versus Japanese yen. I think it's very timely as well because of the news on the BOJ. Now this market, it's very, very technical actually. So as you know, I like to look at the market from a longer time frame, because we need to understand also on the longer time frame how these algorithms are actually placed and how they are working. And as you can see here, there has been participation that has basically broken the break of the bulls here. The bulls were so happy to bring price into this level, and that's a point, bears came into this area, bam, start pushing this price lower, and now we can also see a structure on the downside in this price, right? As you can see here, the price came to this level, rejection. It came to that level again, rejection. Does it mean something to you? I mean, if this doesn't mean anything to you, that's okay. But clearly, you understand that the 50% level is a very important level, right? And when the market gets there, and that's the key of my trading. So let me let me give this hint here to you. The key of my trading is that when the price gets to the 50% level, the probability to get a finished trade is higher. Okay, now if you mind risk in your trading, as you should do, you should know that risk is trader's job number one. So if you're capable of getting a finished trade here around this area, and even if you don't bring this to target, you bring it to lows or whatever, those are the places where you should be trading. Okay, and that's my own experience. Of course, your experience might be different. Anything that works consistently is good, but that's what I'm sharing here, and it works for me. It works consistently, so it's something that you might want to consider and add to your platform here. So anyone interested in knowing about the pound versus Japanese yen, give me a yes. And if you have any other pair that you want to check, I don't know if we'll have time, but let me review this pound versus Japanese yen, and tomorrow you may want to take some of the opportunities here. So as you can see here, there was participation in 188.17, and the market pushed lower into the first target here and also the second target. Now, so this market is very, very extended on the weekly time frame. Not only is extended, but look at how much room this market has and space has to move lower here, right? So I think there is a very good case for a continued short in this market, and this is not one of the market I follow, but I find it's very, very technical market as well. Okay, so what we know here is that this market could come on the weekly time frame to retest, the next measure move, and we are not yet there. Okay, so Roland, I will discuss that. Is that GBP USD? I will discuss that tomorrow, as I don't have time to do it now. But I promise you that tomorrow will be, of course, Sunday at this point, because today is the last session of the week. We are going to have a look at that. If I have time, I'm gonna review that quickly in the recap. Okay, but I tend to spend more time on markets because I want to understand what's going on the larger time frames as well. So larger time frame here says that this 72.30 level has to be tested here. Okay, and that has not been tested yet, which means that there is a potential bias higher in the very, very short term on the weekly and on the lower time frame, so daily. But on the larger time frame, the bias for this market is short, which means that again the Japanese yen should appreciate eventually keep appreciating, I would say, because it's been appreciating already in the last 3 months here, 2 months from this high. So this is going to continue very likely, and the level that the first level I'm going to look at 2 levels. The first level is going to be 172.29, and the second level is going to be also the 176.53. Okay, so these are the 2 levels on this large time frame. What's the daily telling us? The daily is telling us, guys, I'm reacting here, and look at how beautiful this market is. Very, very technical. Reacted at 50%, going long into what? Into the first target, very, very close to that 170, 180, 90 there. And sorry, that's the target. It's very, very close to the 170 to 20. Okay. Jax, I mean, too many markets to comment on. Sorry, but I'll try to say something about that if we have time. If Desi can give me if we can do a time check and go a little bit further, I will comment on both the pound US dollar and the New Zealand dollar US dollar. But let me finish here. So this market could actually move into 172 area, and then that would be a beautiful short. Okay, that would be a beautiful short for this market. When we look at the 240 minutes, we see that structure that is pushing price higher, and we see it very, very clearly on the daily and then on the 4-hour time frame. Very, very technical market. Indeed, I might trade this market next week. Okay, and if I trade it, we might trade it together, and we will actually look at what this market is doing. So around 172, so around this area here, and I'm gonna put a marker here because next week, if you're around, we are gonna trade this market. Okay, I promise. So I like it's very technical and it's in a juncture here. It's very nice to trade. So keep this market in the back of your mind. Whatever happens on the US dollar Japanese yen, the worst thing that can happen, you know what it is that basically the news tomorrow push this price higher right into that area, and bam, there is a short right away tomorrow. And if you're not there to catch it, we will not get an opportunity in this market, and that's the sad part of it. Okay, so this is it for the um, for this market here. Let's just me ask how much time we have here, and then I'll review the other two markets. And actually, so this is clear to you now. We reviewed that. So I go back to my chart here, and the next question, I believe, was the pound versus the US dollar. This market, it's not easy for me to trade. There are some people who specialize on this, and they can look at it in a very much clearer way as I do. But when we look at the weekly here, this market has been technical, very technical on a large time frame, much more than on the smaller time frame. And as you can see here, we have again that pattern of first of these 50% level 158.77 clearly participating here and pushing lower. You're very welcome, Scott. If you have any other, we are going to review that market. Very, very interesting. Next week we're gonna touch on it because I think if it gives an opportunity, I would like to short that market. Okay, so now, as you can see, we are very close to those previous lows and target at 139.53. We will get there, no doubt about it. Look at this pace. Look at the pace the market is getting there. This market is not going to reverse out of nowhere. And a lot of people will invoke lows here, but the very reason this market is going to bounce out of that is that because, of course, there are people who believe previous lows are important, and in a way they are important because there is participation. Sorry, Lee, I don't understand the question. What's the review? So continuing here, pound US dollar, as you can see, the market is actually moving lower into that 139.53. Okay, so if you're in a short, keep and a short to a higher level, keep it. Let the market move lower into the target, and that's the target for you. That's the area where you have to remove the trade. Okay, now what is going to happen next? This market could continue lower. We know that the pound is not in a good shape. Well, the US dollar is not in a better shape, but the pound has been suffering here since basically 2007. There is an unwinding of instruments denominated in pounds, and we can see that clearly as well there. Now, and this is good for risk, it's good for risk reduction as well. That would be one of the things that this chart is suggesting. It's not the only thing that this chart might be suggesting, but there is weakness here. Now, can the market continue lower here and move into the second target? And if you ask yourself where the second target here is, it's a little bit lower here, and we need to kind of move the chart like this. And the second target, believe it or not, it's 129.54. That's the second target. Okay. Now, that's what we can say on the weekly. If we go back and we look at the daily is telling us another story. It's 8:54 here, so I'll just continue until someone comes to me and tap on my back saying you cannot talk any longer. But I think this is very interesting here. So we can get lower. We can also get, so we will get to that level for sure. After we are there, we might continue lower as well. Okay. Now, what's the daily suggestion here? There is a little correction here, but this is just an opportunity to get short. Okay. This is nothing more than an opportunity to get short. We just don't know where that short will come from, and that's the main problem. Okay. Now, this is not a well-formed sequence of measured move here, so eventually this is going to fail. The point is that it's not difficult, it's not easy from this chart to understand what's going to be the anchor the algorithms are going to use. Sometimes it's very easy, sometimes it's very clear. Other times it is not. It could be this level though, the 144.42. Okay, so if market gets there and it breaks the sequence of measure move on the smaller time frame, that's the level to get involved on this time frame. Okay, for 144.42 is a short, bringing price into 137, the 137 level we saw before. Okay, on this time frame here, the market is not very technical, and it might bring price into that, right into that area of resistance there. And finally, I'm going to close very quickly with the other market was asked. That was the long New Zealand dollar, US dollar here, and then after that, I will close. So Australian dollar, New Zealand dollar very quickly here. There is Jax is saying I'm still long from yesterday, and sorry, New Zealand dollar, US dollar you mentioned. It's not the Australian dollar, New Zealand dollar. Here we go. So I think yesterday we reviewed the levels, and I mentioned did I mention the 60? So I mentioned two levels here. One was the 64.55, and I say that's an extension, and the market could actually stop there. The market didn't stop there and just continued higher, but then he had a reaction at that 64.73, and I remember I told you you had a 0.6478 target. I told you that this market could actually react at that level. Now let's go down into the smaller time frame and see what happened at that level. Okay, here you go. What happened at that level? Reaction lower. So, and the reason is that there was participation at the level, obviously, right? How do we know that? Which way is this? So I think it was good if you stay with the trade. Obviously it was a good decision. You told me about your target, so I adjusted your target. And by the way, your target was 78 here, would have been hit anyway. Now I don't know if you see this spike in your data. I see it, but I always stick to the 50%. Now, what happened here is that this market came back into this area, went into the first target, and is still in longs. Okay, it is still in longs, and potentially, but that's not necessarily. Potentially, you could bring this price higher into 0.6526. Okay, will he get there? We don't know. It depends how this is going to play with Bank of Japan here. But if this market continues higher, it's doing now, you should definitely try to bring it to 0.6530 level. Okay, even a little bit lower here, 26.25. All right. So thanks a lot for your question. Now I'm going to start a recap for this review that we did today. So thanks for joining in. Recap for this section. We of course looked at the Euro Australian dollar here, which is the swing trade I'm following this week. I took a few trades, but this was the best opportunity this market this market has provided here, and it's still working for us. I'm going to remove the trade at 152.60, 70 here if we get there. Sorry, 152. Sorry, I said 152.60. That's the first target. That's not the level. The level I'm looking at for this market is the 50%, opposite 50%. That's 152.30, 35. Okay, and we're seeing the market moving into that level, and I'm glad that despite the news on the US dollar FOMC, this market has behaved very well, and it even put 2 days in a row lower lows and lower highs. Very good behavior, and eventually this market is going to be tired and just zoom down into the target. That's my anticipation there. Okay, then what we did is that we gave another look at the SP 500. I wanted to dedicate a little bit more time on this, but and also look at the daily, which we didn't do just yet. But as you can see, it takes time to review these markets, because it's always important to go back to the weekly and understand how the different time frames are working together. Indeed, and this is my strong belief, indeed, I believe that the market price is not more than, in this high volume market, the composition of the behavior that is induced on the markets in the different time frames. So this market price is the composition of this presence of algorithms plus news plus noise on the smaller time frames, and that's what creates price. Okay, that's my strong belief, and I see this happening every day. And we reviewed the SP 500 here. We mentioned again the levels that we should look at. We also mentioned a scenario there, and we now know, you now know what to do if that happens. And if take no action, okay. If watching the market is good as well. I watched the market for a long time. Then we looked at the Japanese yen, and we mentioned that this market on the larger time frame is showing down. On the smaller time frames, daily and 4 hour, is actually showing a potential continuation higher. Look at the participation happening again in 1854 here. This is a beauty. This is an absolute beauty here. And on a smaller time frame, this market would have given on the 1 minute of free trade here already if you were very aggressive. Okay, so as you can see, these levels are real. I will keep repeating that. And so what we anticipate in this market is a continuation higher into a potential level short that could come. The closest is 1990 here, and it might seem a long way up there, but it's the market can move very quickly, and I believe that it's possible for this market to get into 119.30. I then reviewed one of the market that I was asked to review yesterday, and thanks for joining in today. I'll have some other markets to review actually. Thanks for that. The market was the pound versus the Japanese yen. And let's go back to the charts here, and then let's review the pound versus the Japanese yen, which I have here. And beautiful market here. I'm glad that you asked to us to review it, because I believe this market is ready to test the 172.20 area eventually and become a short from there. Okay, now the exact level I'll give you if you join, if you keep participating and join the room regularly. If you are here, this is a market that could actually provide us with an entry at the Tokyo session, so maybe Sunday or even at the beginning of the week. So stay tuned here, because this is a very interesting market, and there is something to look at. Then we looked at the pound versus US dollar. What we say there is that this market has a target below. It's looking below instead of looking left like you would do on a street in London, UK. You have to look below in this market, because there is a target. It's very clear. It's there, 139.50 area, 60 area. Okay, so with this market reacting a little bit here, it's just giving us an opportunity to get short. And if you look at that, pound is weak against the US dollar as well as against the US dollar Japanese yen. So we're probably not going to see a lot of action in this market if we get a strong news by the Bank of Japan. Okay, and finally, we reviewed the New Zealand dollar, US dollar, and I mentioned that this market has a potential for a continuation higher on the larger time frame. As we mentioned yesterday, this market has tested twice now the 63.70 area, and it's pushing higher a little bit. Higher to where? Well, when we look at the daily, we have this formation here, which is not clear, but we also mentioned that once a large level is tested, the market can be a little bit jagged, like here, a bit jagged, and do not respect the levels that are offered by algorithms, and that gives algorithms an opportunity to keep adding to their position as well. It's not necessarily bad. And then when we moved on the 240 minutes here, we showed that there is indeed a potential for this market for a continuation higher. I think I showed that on the 15 minutes here, and I showed the fact that there was again participation at the 64, and there is a potential for this market to get into highs here, the 65.26. Okay, participation is there. If the market comes back to this level, it's going to be a second test. It's a dangerous test, but the movement here looks promising. All right. So thanks a lot for joining today. I hope this was interesting. I think there are a lot of markets that might offer an opportunity for trading next week. Particularly, I'll keep an eye also on the pound versus Japanese yen, and of course, I want to see my euro Australian dollar trade here being completed. And as you can see, again, when those 50% level come into play here, let me show that to you. There is always some sort of participation. So these levels are real, as you can see here. And will this be enough to bring price higher? I have no clue if that is going to be enough. I believe it's not going to be enough, and maybe tomorrow or on Sunday we're going to see the price actually get into this first target and potentially lower. Okay, so thanks a lot for joining in today. Keep joining. There is a lot to learn and to discover about this market, and we're going to discover together very good setups as we go. And we continue next Sunday with the next Forex Tokyo open session here at FX Street. Thanks a lot, and bring your question as you come. And as you know, I don't shy away. I always like to look at the market, also the market I don't follow. Okay, so thanks a lot, and let me see who's in the room here. Thanks, Todd, Roland, Jax, Greg, Rory, the Grace, Dale. I don't know if he's on, but don't forget that the next great appointment with Tech Analysis is going to be with Dale Pinkert in his room in the morning. So if you get into the room, I mean, it's going to be a lot of fun, very informative, and very good trades as well. So thank you, Ray Tosin, Label, Joe, Desi, Peter, Adinda, Ryan, Beetle, Roland, Famom, Roland, Lee, Lucas, Ali, and Nat. Thanks a lot for joining in. I'm going to see you on Sunday. And if you like the show, if you like what we do here, tweet it on Twitter and tell your friends, and let's create a large community here, and let's take serious trades and do a serious analysis of this market. Thanks a lot, and I'll see you on Sunday, 8 p.m. Forex Tokyo open session here at FX Street. Have a good night now. Bye-bye.